This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on March 23rd, 2012. Our time, 8:40. That is Mountain, 10:40 Eastern. Radio show runs AM 640 in Toronto, 630 CHED in Edmonton, also QR 77 in Calgary. And it is the 23rd. It's my sister's birthday today, my cousin's birthday, so happy birthday to them. My birthday in a week. Yes, time does fly. A little bit of housekeeping. Our show is on Sunday morning in Edmonton this week. Next week, we will be on at 3:30 in the afternoon. The World Financial Report on radio on 630 CHED, 3:30 in the afternoon next week. Keep that in mind, and we're happy to welcome new listeners in Edmonton who are listening early on a Sunday morning. Our radio show is archived on our website, HESradio.com. If you ever miss a radio show, the shows are archived there, HESradio.com. To invest in precious metals, the telephone number 1-866-623-2002. There's only one company Harold recommends you use when it comes to investing in precious metals, Worldwide Precious Metals, WWPMC.com. Their website, rarecoloreddiamonds.com, is Harold's website for diamonds. The telephone number to speak with him about diamonds, 1-800-432-1022. And he has an auction website, hsfineauctions.com. The next auction is coming up on April 9th. We'll talk about that a little later in the show. As we get into the show, Harold, a lot of people, and we have this in our free weekly newsletter. You can get the newsletter from Worldwide or Herald. We send it out free of charge via email every week. People very concerned about the sovereign debt crisis. Everyone thinking it's over. A lot of very smart minds saying, no, it's not over. It will cause more problems. Even though we've had another bailout of Greece, still more trouble down the road. All they've really done is kick the can down the road. The other concern is they're starting to be concerned about inflation. And Harold, you've talked about inflation and where it might go for quite some time, and you have some serious concerns.
Well, we better all be concerned. Are you kidding? Because, again, there's no doubt that we're going to see massive inflation in several parts of the world. In fact, it's already showing up substantially in China. But all in all, the week was a very choppy week again, and we expected this, and expect this because, you know, this is an election year in the United States. So with so much posturing going on and so much, you know, numbers coming out that just don't make an awful lot of sense, we do anticipate that the market will remain choppy going into this election year. But all in all, the gold market, which was choppy this week, is doing extremely well on Friday as we're taping the show, and the market's basically trading within its range. The gold market, as we speak, opened lower this morning, but now is up $16 on the day, and we're actually trading back up above the 1650 level, trading right now at 1665, up $16 on the day. Now, the range, the heavy support for gold is at 1625 and then at 1580. I would say at this particular point, we're very close to the bottom end of that range. So again, I think that we have a very minimal downside to gold at this particular point, but we have a phenomenal upside. Downside in the tens of dollars and upside in the thousands of dollars. So on a risk-reward ratio, I think the gold is a screaming buy at this particular point. We don't want to see a leverage gold or silver or any commodities at this particular point, anything heavy, because these markets are so volatile. And again, with what's happening in the United States, Europe, and the Middle East, and now China, you really need to watch what's going on, because it's really the fundamentals of the market that's really going to tell you where this market's going to go. You know, the short-term trading, which are the technicals, are telling us that the market's trading within a range because, again, so many conflicting numbers are coming out into the marketplace. But all in all, what Randy said at the beginning of the show is extremely important. We have inflation. The inflationary numbers in Canada were up this month. The inflationary numbers in China are skyrocketing. The inflation all over the world is high, except, again, they're not giving us the actual numbers because they don't want to see the metals markets fly and the paper markets drop. But it's inevitable because the trend is always your friend, and there's a reason why gold is sitting in the $1,600, $1,700 range at this point, and primarily that's because of inflation. The silver market, the same as gold. Silver's trading in the lower end of its range at this point. Right now we're up about 50, 60 cents on the day. In actual fact, the low for silver on Friday so far has been 31.46, and now we're trading at 32.26, so we're up about 80 cents on the day from the lows of the market. We're very bullish on silver. Silver is a very heavy industrial metal, but it's also a very important financial metal and moves up with inflation the same way as gold does. So with silver, below its $50 high, $18 below its $50 high, I think silver is the best buy of the bunch, and I do believe we're going to get a very strong rally. But again, expect this type of trading this year, getting closer and closer to the elections coming up. And again, once the elections are over, we do think that we're going to get a firm move upwards in gold and silver that's going to take us up into the $2,000 level or higher in gold, and probably above $50 to $60 in silver. So again, realizing that silver's trading in the $30 range at this point, I would be a buyer of silver. I think the risk is low, and I do believe the potential upside is extremely high. As far as gold goes, it's trading, like I mentioned, at the bottom end of its range. 16.25 is heavy support. 15.80 is the heavier support. And again, those are the two numbers that are extremely important. As far as silver, it broke support at $32, but the two major next levels are $30 and $28, and I do believe that those levels will hold. The oil market is another reason why the gold and silver markets have been a bit erratic this week, and we talked about it on last week's show. The fact is that we're extremely bullish on oil for two major reasons. Number one, shortages in the oil market, even though they don't admit to that. And number two, the potential war in the Middle East, which again, we do believe is coming and coming fairly quickly. So basically, we talked about that the oil market would be very volatile, and it was volatile this week. And we saw a couple days where the price of oil dropped down $2. Today, we're up basically $2 in oil today. So again, there's the volatility that I've been talking about. The reason that we felt that oil would be volatile is primarily because higher oil prices will derail any type of recovery that the economy is making. So basically what the U.S. government will do at all cost is try to bring down the price of oil. Now, they do that in one major way. They talk about, or actually do it, they'll release part of the strategic oil reserves that the United States holds in case of wartime. So again, why in the world would we be using strategic oil reserves that are supposed to be used exclusively for wartime situations? And it's primarily, again, because of the elections. President Obama would like to see the price of oil come down substantially, and by talking it down and possibly by releasing some of the strategic oil reserves, it will accomplish that. However, it's only a short-term fix because oil is extremely bullish, and one of the dead giveaways, to me at least, that we are getting very close to a potential war in the Middle East is the fact that they are talking about releasing these oil reserves to bring down the price of oil. Now, they'll normally do something like this, bring down the price of oil prior to a major rally coming in oil, and I think that's actually what the market is telling us, is that we are very close to a potential Israeli strike on Iran, and that could literally bring the price of oil up to $200 to $300 to $400, depending on how serious the situation is. Again, countries around the world have an awful lot to deal with right now. We also talked about China last week. We said that things in China were nowhere near as good as everybody was thinking that it was, and basically that news came out this week, which is another reason why the metals markets fell off and why oil fell off, because, well, China goes into its downturn financially, and I do believe it's going to be a very hard downturn for China. They're saying that they won't use as much oil, but China has so many cars on the road, so does India, that it is not going to affect the price of oil. Again, this is a ploy to talk down the price of oil prior to a major rally coming, which is probably going to result from Israel attacking Iran. So now we've got a scenario where you look at the worldwide scenario and you try to figure out what happens here. Number one, you've got China in financial disarray. The real estate market is in shambles. So is their economy. They're major buyers of precious metals, which is the smart thing that they've done, but they've got inflation and they admit to it. And you will see China raise interest rates to fight inflation. They're smart about doing that. Then you've got the situation in Europe. By the way, we're talking about France, Italy, Spain, Portugal, Ireland, all those countries are in huge financial trouble. The situation has been going on for so long now, it's almost getting tiring to talk about it, but the bottom line is it is there, and that is a very inflationary situation. And why is it inflationary? Is because in Europe, there's not enough money to bail out all those countries that I just mentioned. So what's going to happen in more than likely, and it's going to happen over a short to intermediate period of time, is that you will see that some of these countries that are in such horrible financial shape, like Greece at this point, and Portugal, what they're going to have to do eventually is more than likely go off of the euro and go back to their own currency. At this particular point, and I don't want this to be confusing, the euro is trading at 1.32, $1.32 against a basket of foreign currencies, including the U.S. dollar. Now, if Greece had to go back on their old currency, they would go off of the euro and back onto their old currency, which would be at about a third or less of what the euro is trading at this point. That would put Greece into a horrible financial situation. It's basically like taking away 3/4 of your net worth just in one currency transaction. One day you're worth this, the next day you're worth a quarter of that, and that's basically what will happen. What they will have to do in Europe is print money in order to pay their bills and keep their government going, and that's inflationary. That's what the U.S. has been doing, printing money. That's inflationary. That's what's happening in Europe, and that's inflationary. So everything that we're pointing to at this point points towards intermediate to longer-term inflation, which is exactly why we've been recommending hard assets like gold, silver, and diamonds, the three best areas to take advantage of extremely high inflation. Now, the other thing about oil is that we're extremely bullish on oil because of shortages in the market, and that's what made the market rally on Friday. So far, it's showing that Iraq's exports are way down, and with the sanctions that the U.S. has brought against Iran, their oil production is way down. There's no way in the world that Saudi Arabia can make up for the differences that are being lost with Iraq and Iran's oil. And this is only the start of it. The situation in the Middle East is so strong and so out of control at this point that it could cause the price of oil to rally to over $200 a barrel. I've recommended for the last couple months, because we are so bullish on oil, those that do want to take advantage of the oil market, there is an exchange-traded fund, an ETF called USO, stands for U.S. Oil, and that is the ETF that I would buy to take advantage of the oil market. It's friendly to your RSP, it's not leveraged, and it almost moves penny per penny and dollar per dollar with a crude oil market, which is what you want. You want to be in the inflationary markets. There's no doubt that with what's happening in oil, what's happening in the Middle East, what's happening in the United States where they can't pay their debts, and what's happening in Europe, we're going to have massive inflation. It's only a matter of time, and it's going to happen over the next 5 years. So basically, what you're going to see is a continuation of what we're seeing at this point until the elections are over, and then we could literally see the price of hard assets explode like gold and silver. I do think that we are going to see gold above $2,000 this year, possibly as high as $2,500. Depends on how severe the situations are in the Middle East and the areas that I just mentioned. The fact is that silver could take off, gold could take off, oil could take off, and those are all inflationary situations. So here's what the problem is with us, the small investor. We're not the Warren Buffetts of the world. We don't have billions of dollars in our bank accounts to offset what's going to happen, and it's going to happen over the next 4 to 5 years. You see, the Federal Reserve in the United States has said that they're going to keep interest rates at zero till at least 2014. That on its own is extremely inflationary. But then to reinflate the economy, they're going to have to raise interest rates. And as they raise interest rates, just like they did in 1980, it will cause gold and silver to make its final rally, which could bring the price of gold up to who knows. Could be 5,000, it could be 10,000, depends on how severe the worldwide inflation is. And again, only time is going to tell how high gold and silver are really going to go. What we need to see at this point is for gold to break above the $1,900 level. That's the all-time high, and we need to see silver break above $50, and it is very possible that that will happen later on this year. If your income is remaining the same, if you do not have investments that are going to increase in value as inflation goes up, you're going to be in financial trouble. And the reason for this radio show, it's been on for over a decade now. We started buying gold at $250 and silver at $3.80 and oil at $18. So again, what we need to really gear up for right now is the oncoming slaughter of inflation that's going to happen over the next 5-year period. And to join it in year 3, 4, and 5 is going to be a mistake. The chances are is that if you don't get into the hard asset market at this particular point, you're going to find that your assets are going to start to dwindle substantially. And all it would take would be a war in the Middle East to cause the price of oil to go to $250 to see that your assets are going to drop substantially if they're not in gold, silver, diamonds, and oil. And basically, the way that inflation works, as complicated as the arithmetic is, it doesn't have to be that ridiculous or that confusing. All it basically means is that if your family makes X amount of dollars a year, makes $50,000 a year, and out of that $50,000, you're going to pay your income tax, you're going to pay your mortgage, you're going to pay for your 2 cars, you're going to pay to put food on the table and clothes on the kids' back, and if there's anything left over, you're going to put a couple dollars away for savings. However, once oil prices start to rally even higher than they are, and we're sitting at 108 in oil, so it's high already, and food prices are going higher, and it costs more to heat your home, if you don't have assets that go up in value to fight inflation or to compensate for inflation, you're not going to have the money you need to pay your bills. So the bottom line is that the way that we used to invest, buying gold, buying stocks and bonds, is not the way to invest at this particular point. The way to invest is the opposite of that, hard assets like gold, silver, and diamonds, and oil, because those are the ones that will compensate for inflation, and there is zero doubt that we are going to have massive inflation. In my opinion, it's impossible not to have massive inflation over the next 3 to 5 years. So my strongest recommendations are to get out of the paper asset market, meaning stocks and mutual funds. I'd much rather see you sitting in cash than risking your money and losing all of that. And if you don't think that that's going to happen, do I have to remind everybody about 1999 when the stock markets around the world plummeted and the NASDAQ in the United States dropped from 5,000 down to 1,000 and everybody lost all of their money? And then again in 2008 when the Dow dropped from 14,000 down to 6,500 when the financial world almost came to an end. Do we think that those days are behind us and everything is getting rosy again? When you put $4 trillion back into the marketplace, something positive better happen. But with all the money that was put in QE1 and QE2, which is quantitative easing 1 and 2, it has not done the job that the U.S. government and the Federal Reserve thought it was going to do. Do you know, while all the world is suffering financially, the United States owes $15 trillion. Several countries in Europe are on the verge of bankruptcy. China now has massive financial problems, and we have major problems in the Middle East. As all these situations are going on, it's just an unbelievable time in history, and we really need to be concerned about what our next situation is and what we're going to do to survive financially. Do you know why when all those situations are going on at the same time, the Federal Reserve actually made $8.8 billion last year? Every bank is losing money. Banks are being closed down like it's going out of style. Families can barely keep their heads above water. The real estate market in the United States is in shambles. We're going to have massive world inflation, but out of nowhere, the Federal Reserve makes $8.8 billion last year, and the whole United States financial markets are in turmoil and chaos. So again, we're going to head into some of the most dangerous times. Nobody actually knows what the end result is going to be, but everything seems to be pointing towards high inflation, massive inflation. Let's get ourselves ready for it. If you're not already in the gold, silver, diamond, and oil market, I very strongly suggest that you get our newsletter this week, that you listen to the radio show regularly, and you get yourself in a position to fight inflation, because inflation can literally kill us financially. Don't forget, in 1979 and 80, many of us remember this, we had double-digit inflation. we had 22% interest rates. At the same time, gold went from basically $35 in 1972 all the way up to $850 by 1980, and that was all because of inflation. And silver went from $1.25 all the way up to $52. So this is what's going on. If we don't pay attention to history, history always repeats itself. And again, I'm a firm believer that we need to be able to fight inflation and get it now before prices get so extreme that we can't afford to do it anymore.
We have a story in our newsletter that backs up what Harold has been saying. Mark Faber, who is a money manager, says, beware the unintended consequences of money printing. Every money printing exercise in the world leads to unintended consequences at a later point. And this is the important issue to remember. We don't know yet for sure what the unintended consequences are. That's why you need to have an allocation of precious metals in your portfolio, whether it be 5, 10, 15, 20, 25%, whatever you feel comfortable with. It's time to learn about having precious metals in your portfolio. There's one company Harold recommends you use. They're a Canadian company, been in business for over 10 years. They're Worldwide Precious Metals. This is the only company Harold recommends you use. The telephone number, 1-866-623-2002. Their website, wwpmc.com, wwpmc.com. You can get our free weekly newsletter from them sent out to you via email every week. They can help you manage your precious metals investment account. You can trade the market if you want, just buy and hold your metal. They are there to help you maximize profit, minimize risk. They're the experts in a very specialized market. Stay away from people who do not specialize in precious metals. And it's very important that you know this is a liquid asset you can buy and sell with a phone call. The metal can be stored in your behalf, delivered to your door. You can take physical possession of your metal anytime you want. Worldwide will go through all the different ways there are to have an allocation of precious metals in your portfolio, whether it be good or bad times. And in our newsletter this week, we have some stories that are must read. And if you'd like to get our newsletter, call Worldwide, 1-866-623-2002. In fact, Jim Sinclair, one of the great minds in the gold and silver field, said FedEx shipments are down, which is not good news for the bulls on the U.S. economy. The dollar is becoming yesterday, while the euro and won are the new settlement currencies for international transaction. Quantitative easing is to infinity. The global drag on the U.S. will be the cause. The real range for gold in 2012 will be anywhere from $1,600 to $2,111. Christine Lagarde, who is the head of the International Monetary Fund, said this week that the world should not be lulled into a false sense of security. Don't be lulled into a false sense of security. She urged policymakers to be vigilant on oil prices, debt levels, and the risk of a slowdown in the emerging markets threatening global economic stability. And she goes on to say optimism should not give us a sense of comfort or lull us into a false sense of security. She said that at a speech in Beijing, China. Went on to say as well, we cannot go back to business as usual. William Dudley, who is a Fed Reserve Bank chief out of New York, a president, said the signs of the economy in the United States seem to be turning, but it isn't out of the woods yet. Very concerned once again about gasoline prices, fiscal cutbacks, job market, weak housing market. And he said, let's be careful here now. The United States is not out of the wood. Also, David Rosenberg from Gluskin Chef out of Toronto saying, despite the gains that we have seen, this is the weakest recovery ever. And he told CNBC, you can read this article in our newsletter, he said when you take into account what the Fed has done with their balance sheet, triple it in size, zero policy rates for 30 years, of course you're going to get some growth. But if you take a look at exactly what has been happening, this is actually very, very weak, the weakest recovery ever. And that is a huge concern. Also, and this is very, very important, William Buter, chief economist at Citi, told CNBC, the worst is yet to come for Europe. Despite high-profile measures such as the Greek debt deal and massive pumping of liquidity into the banking system, Europe's problems have merely been delayed for another day. And he went on to say, we have just paused for breath. The long-term refinancing operation, really hasn't solved the problem, and for Europe, the worst is still to come. He also predicted a further large-scale ECB intervention later this year or in early 2013. And what he's talking about is printing money. Coming out of PIMCO, the bond fund manager in the United States, Mohamed Al-Arian, who's the CEO, said Portugal will be the next Greece. Also from PIMCO, Neil Kashkari, who heads up their global equities. In fact, he was the head of the TARP fund in the United States. He came out and said that nothing has changed in the United States, nothing has changed in Europe. Nothing has changed at all. And on top of it, he agrees with Mohamed Al-Arian that there are going to be a need for more bailouts in Europe. That's why we're saying here, as we have about 30 seconds left in our first segment, that's why we're saying have an allocation of precious metals. It's an insurance policy in your portfolio. The experts who can help you get that insurance policy, Worldwide Precious Metals, their telephone number 1-866-623-2002, the website www.pmc.com. Going to come back and talk about diamonds. And hsfineauctions.com is the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us by the telephone, our financial expert, Harold Siegel. We're taping the show on March 23rd, 2012. Our time is 9:07 Mountain, 11:07 Eastern. Radio show runs AM 640 in Toronto, QR 77 in Calgary, 630 CHED in Edmonton next week. We normally run in Edmonton at 3 o'clock in the afternoon on Sunday. We're on Sunday morning as a one-off, but we will be on the air at 3:30 in Edmonton next week. Keep that in mind, 3:30 in Edmonton next week. To invest in precious metals, the company Harold recommends you use, a Canadian company. They're experts in this very specialized field, Worldwide Precious Metals, www.pmc.com. The telephone number, or the website, telephone number 1-866-623-2002, 1-866-623-2002. www.pmc.com is their website. It's that time of the show where we talk about investing in another hard asset that has done incredibly well, and that is diamonds, rare colored diamonds, natural fancy colored diamonds. Harold's website is rarecoloreddiamonds.com. You can connect with Harold at 1-800-432-1022. Harold has his auction site, hsfineauctions.com. The next auction is on April the 9th, and we will talk about that here shortly. But the next auction, April the 9th, go to the website, hsfineauctions.com. Take a look at what has already been auctioned in the past auctions, and definitely go to rarecoloreddiamonds.com because we have a featured diamond for you this week that is a 0.38 carat radiant cut, fancy intense, purplish pink Argyle diamond. It's from the Argyle mine. And at Argyle, pink diamonds making it into the annual tender are literally 1 in a million. For every 1 million carats of rough diamonds produced from the mine, only 1 polished carat is offered for sale in the tender. In terms of global diamond production, pinks make up only 0.03%. Experts agree that prices for colored diamonds, pinks in particular, are on the rise, noting that the barrier was broken in recent years that have thrust pinks, previously selling for $500,000 to $600,000 a carat, into the 1 million a carat realm. And you can see the video for this diamond on Harold's website. We have a link to it in our newsletter. Harold, this is a stunning diamond, but when you're talking in terms of 0.03%, that is the rarest of the rare. It's like having your own masterpiece work of art. It is actually art. It is a work of art from Mother Nature. It is stunning, to say the least.
You bet. And Argyle pink diamonds, the beautiful thing about them, not only are they extremely scarce, but soon there will be no more, because the Argyle mine that produces 95% of the world's pink diamonds, which is obviously a very small number based on what, the statistics that Randy just told us, But you're talking that this mine is going to close before 2018, and we anticipate that the price of Argyle pink diamonds will skyrocket in price over the next 10 years by 10 times what today's prices are. It's the same thing that we saw with blue diamonds when they closed one of the top blue mines in South Africa. The price of blue diamonds went from $200,000 to almost $2 million a carat within 5 years. Now, the diamond that's the featured diamond this week is one of the rarest diamonds you will ever see. And those that have been following the Argyle pink diamonds for the last 6 or 7 years understand just by looking at this particular diamond why it is so extremely rare. Number one, the color is intense. It's a very, very rare color, one of the strongest pinks that you could possibly get. The oval is a very popular cut because it makes the diamond look much larger than what it already is. No matter what size the oval is, an oval always looks larger than most other diamonds. But the thing about Argyle is that 90% of the time, they will grade their diamond on color only. The color is by far the most important thing. And those of us that know Argyle pink diamonds realize that if they're basing it just on their color, most Argyles are eye-clean diamonds, means that the way that the Gemological Institute of America grades a pink diamond is basically, or any diamond, they grade it on their clarity. Now, the clarity, the best clarity you can possibly get is an internally flawless or flawless diamond. That very, very seldom ever becomes available in an Argyle pink diamond. In fact, what really makes up the color of a pink diamond is the imperfections. So 90% of the Argyle pink diamonds, in my opinion, are considered SI1s or SI2s, eye-clean diamonds, but they do have flaws. This particular diamond is so rare, not only because it's an Argyle, not only because it's the right size, it's a very nice sized diamond, but it's a near flawless diamond, which is extremely rare. That adds tremendous value to this diamond. So not only is this a beautiful, intense Argyle purplish pink oval, it's also a VVS2, one of the highest quality diamonds we have ever had. So this is a very special diamond. It's an extreme investment diamond. It's at a phenomenal price, but this diamond 10 years from now could be a $300,000-$400,000 diamond, and at this point the diamond's selling in and around the $50,000 to $55,000 range. It's not for everybody. Not everybody has that type of money to invest, but why would you want to invest in a diamond in the first place? First of all, we're not talking about any diamonds. We're talking about rare color diamonds. Red diamonds are the rarest diamonds in the world. Most people don't even know that red diamonds exist because, number one, they're very, very seldom advertised. Number two, there's only been approximately 60 red diamonds over a carat ever found in the world. And number three, they're the most expensive diamonds that you could possibly get. Back in 1950, one was bought for under $20,000. That diamond today is worth over $2 to $3 million, and that's what the diamond market has always done. It's appreciated very, very quietly. But the fact is, the diamonds that we offer to our clients to fight inflation and also for safety and for retirement are very safe diamonds. They never, ever decline in value because there's so few of them available. So we recommend the Argyle pink diamonds, for one, because the Argyle mine produces 95% of the world's pinks. The mine is going to close before 2018, and if you're one of the fortunate ones to own an Argyle pink diamond, a diamond you could buy today for $50,000 could be a $500,000 diamond in the next 8 to 10 years, and we do believe that those numbers are accurate and will happen. They've happened in the past, they'll happen again. The other thing about Argyle is that their colors are starting to change. As the mine is coming closer and closer to its end, the colors are not as extreme as the featured diamond that we have in the other loose diamonds that we have on our website. In fact, we went to buy the last parcel of Argyle pink diamonds, and the color was so light that for the first time ever, we passed on that parcel. So basically, you want the deeper colors. You want the fancy pink, the fancy intense pink, and the fancy deep pink and the fancy vivid pink. Those are the best colors you can get. Those are ones that go up the most in value, and those are the ones that we specialize in. So if you go to the loose diamond section of my website, rarecoloreddiamonds.com, rarecoloreddiamonds.com, and go to the loose diamond section, you're going to see our array of diamonds. This is not all of the diamonds that I own, but there's a very, very strong selection. Some of the rarest diamonds are put away, and I very seldom show them, but I do have diamonds starting at 15,000 and going up to 35 million. If you go under pink diamonds in the loose diamond section, there's 3 different colors that we recommend. The 3 best colors: the fancy pink, the fancy intense, and the fancy vivid. And if you go to those sections and you click on a diamond that you're interested in, you'll be able to watch a video on that diamond. And we're the only company that does this. We video our diamonds so you can see every aspect of the diamond. And these are the most sought-after, beautiful investment diamonds in the world. Again, in a world that we live in now where we are so confused over the stock markets and mutual fund markets and currency markets and what's going to happen with gold and oil, and is Europe still going to be here, and what's going to happen with the United States, the thing about these diamonds, they're portable private wealth. If you ever needed to cross a border, leave the country, do anything, this is the only asset that you could do it with. It's the only asset that could be sold in another currency. If the U.S. dollar fails or the euro fails, these diamonds can be sold in Chinese yuans, in British pounds, in any other currency. And by the way, you know, everybody knows, or most people know, that diamonds over years do nothing but go up in value. But the major problem has been, how do you resell those diamonds? And I've been in the business for 35 years, and again, even though I have a huge following in Canada and worldwide, the fact is that we built H. Siegel Fine Auctions to resell our clients very high-end collectibles. And that's what we have to offer to our clients, along with the best diamonds that money can possibly buy. We built H. Siegel Fine Auctions so our clients have a secondary market to resell their diamonds. Not only diamonds, but very high-end collectibles, because there has never been an avenue to resell these amazing assets. Back 5 or 6 years ago, my company, HES Marketing, had sold some of the most beautiful gold and silver and platinum coin sets to our clients, and because the price of gold and silver has skyrocketed over that period of time, some of our clients are now putting up these very valuable gold and silver and platinum pieces on H. Siegel Fine Auctions. And to give you an example, on the last auction, a client put up a beautiful Libertad coin, which is a 32-ounce, 1 kilo Mexican silver coin, one of the most beautiful coins that you could possibly purchase. This coin was purchased for $1,500 and literally sold at auction for over $4,000. So that's what H. Siegel Fine Auctions does for our clients. We're the only company that has this. It took us 2 years to build it and a fortune of money, but it's one of the most exciting things that we have ever done. Now, I built this for my clients and my clients only. There are other companies out there that do follow us in everything that we do. They follow our radio shows and the way that we do business, and now that we've been in the diamond business and the diamond prices have skyrocketed, these companies are now following what we're doing in diamonds. However, they can never resell your diamonds for you. So the fact is that if you go to our auction site, which is H for Harold, S for Siegel, so it's hsfineauctions.com, you're going to see the most amazing auction website you have ever seen. This is the only live, real-time auction site ever built. And it's one of the most exciting things you're going to ever see. We're going to have an auction on April the 9th. It's our next auction. So pay attention and go to that site, because you're going to see the catalog come up next week. We're going to offer about 6 or 7 magnificent gold and silver and platinum coin sets. And if you're bullish on gold and silver, you definitely want to look at these coin sets and you want to bid on them. 2 auctions ago, we sold Oprah Winfrey's pink diamond necklace. That's how exciting this auction website is. There's also going to be probably 6 or 7 pink diamonds up on the website for sale, and there may be an emerald, ruby, and sapphire. We haven't decided as of yet. So pay attention. Go to the website next week, hsfineauctions.com, and you can sign up. You don't have to participate if you don't want to. At the last auction, we had 600 people sign up and 200 people bidding. So the only way you can view the auction is to sign up. You will be given a password. It starts at 8 o'clock Eastern Time 6 o'clock Mountain Time, and if you just want to watch it, you can certainly watch it and enjoy the show and get comfortable with it, and maybe the next auction after that you'll participate. If you're one of the many that have participated in the auction already, you know how much fun that is, and there's been great deals. The sellers have been happy, the buyers have been happy, and the company has been very pleased with the way that the auction has been going. This is going to be our 5th auction coming up on April the 9th at 8 o'clock Eastern, 6 o'clock Mountain Time. So we're very, very heavily recommending pink diamonds because the Argyle mine is going to close. And again, the featured diamond is one of the rarest diamonds because not only is it a beautiful, fancy, intense pink oval, purplish pink oval, but it's also a VVS2 clarity, and it's priced to sell. We want our clients to do extremely well. We actually make our money when you sell your diamond, because we get 10% of the profit when you sell your diamond through our auction site, which again is our incentive to make certain that we do extremely well for our clients. And we've been doing well for our clients for many decades now. We've talked about pink diamonds, how important they are, and that the Argyle mine is going to close its doors before 2018. So again, that's only 6 years from now. Many of my clients put these diamonds away for retirement. Again, you cannot rely on the stock market and mutual fund market to retire, but to put away a diamond for the next 8 to 10 years will give you the money that you need to retire in a much more comfortable level. The other diamonds that we recommend very strongly are yellow flawless diamonds. Now, there's many different colors of yellows. We only deal in the 3 best colors: fancy yellow, fancy intense yellow, and fancy vivid yellow. Those are the yellow diamonds that you want to invest in. They start at about $15,000 and they go up from there. These diamonds go up by 25% a year every single year, and they double every 4 years in price, meaning that a diamond that you could buy today for $20,000 in 4 years from now is going to be worth $40,000, and in 8 years it's going to be worth $80,000. That's what it's done since 1980, and it seems to do that every single year. But these diamonds have to be flawless, and they have to be of the highest color grade. We cut, meaning my cutters that cut exclusively for me, we cut 90% of the world's flawless diamonds. It's extremely difficult to do. They equate it to cracking an eggshell and putting it back together. That's how difficult it is to get a very high quality yellow flawless diamond. So 95% of the top yellow flawless diamonds are on my website, rarecoloreddiamonds.com. The other ones that we take a pass on are in the hands of our competitors, and we really don't deal with those or recommend them at all. The fact is that these yellow flawless diamonds not only go up by 25% a year and double every 4 years in value, but on top of that, during times of high inflation, like in 1979 and 80, these are the assets that went up the most. They went up 500% in 1979 and 80. In fact, when gold went to $850 and silver went to $52 and interest rates went to 22%, our diamonds went up 500% those 2 years. And we believe in the next 5 years that we will experience the same inflation that we saw back in 1979 and 80, except even stronger. So basically, a diamond that you can buy today for $20,000, with the inflation that we're looking at, can be a $100,000 diamond in the next 5 years. We very, very heavily recommend that you invest in yellow flawless diamonds. Put it away for your safety, for your protection. It's real estate in your pocket. You could literally walk around with $1 million diamond on your wife's finger or in the pocket of your jeans, and nobody would even know about it. But try to cross a border with more than $10,000 in cash and see what happens. These are amongst the safest investments because they don't trade on exchanges. The reason that gold and silver, oil, stocks, mutual funds go up and down in value is because investors have their own opinions as to what's going to happen. When you buy a stock, you're buying it from somebody who's selling it because they don't want it anymore. That's the exchange-traded products like stocks and commodities. That doesn't happen in the diamond market. They don't trade on exchanges. They trade hands privately or at auction. So again, we're the largest dealer of flawless yellow diamonds in the world. Nobody has what we have. And again, we keep our prices extremely low because we want our clients to do extremely well, because when we sell our diamonds for you, your diamonds for you down the road, that's when we both do well. You get 90% of the profit, we get 10% of the profit. And if that doesn't tell you the confidence that we have, I don't think anything will. We're heading into the most difficult, dangerous, and confusing financial times we've ever seen. We have guys like George Soros, the most prolific investor of all time, saying that the financial markets as we know it are going to crumble, and we're in terrible financial disarray. If that is true, and I do believe it is true, and some of the most brilliant minds are saying the same thing, why doesn't it make sense to take a safe asset and put it away for protection? There's no risk to it. You can sell it any time. We have HS Fine Auctions to sell your diamonds for you. Now, at this particular point, very few people are selling diamonds. They're buying diamonds. So basically, the diamonds that are being sold are my diamonds that we actually bought last year from rough diamonds, cut and polished, send them to New York to the Gemological Institute of America to be graded, and every one of our diamonds are graded by GIA, the Gemological Institute of America. So again, we've got massive inflation coming, we've got currency wars, and we've got the potential of countries going bankrupt. These are times that most of us have never gone through before, so conventional investments do not do well during these particular times. There's danger out there, and you need to have money invested in safer assets. Gold and silver are a great hedge against inflation, and so are diamonds. And again, I'm very, very bullish on the diamond market. Myself personally, I have nothing invested in paper assets, no stocks, no mutual funds, no bonds. I have all of my money, and I'm extremely conservative, as are most of my clients, in diamonds, gold and silver, and cash. All of my real estate is paid for with absolutely no debt. We're going to head into the most troubling times over the next 5 years we have ever seen. I urge you to do the right thing. We've been doing this radio show for over a decade now, and when we first started, gold was at $250, silver was at $380, oil was at $18, the euro was at 87 cents, and when we brought diamonds to you 7 years ago, nobody even knew that colored diamonds exist, and now a week doesn't go by that somebody is not writing an article on natural fancy colored diamonds. Again, we want your business. We'll work hard for your business. And again, with everything happening in the world today, you need to have something put away for safety, and that's the rare colored diamond market.
Speak with Harold about the featured diamond, a 0.38 carat radiant cut fancy intense purplish pink diamond. Go to rarecoloreddiamonds.com. Take a look at the featured diamond. Telephone number to connect with Harold, 1-800-432-1022. We have about 2 minutes left in our show here. A couple of things I wanted to get to. Paul Momlanovich, and he had a very interesting article. You can see it in our newsletter, The Dow versus Gold versus Silver since 2008. Here's the tale of the tape. On January 2nd, 2008, using the closing price for the first market day, the Dow was at 13,043, gold was at 846.75, silver was at 1493. And here we are at the closing Friday, March 16th, 2012, along with the percentage of gain or loss. The Dow was at 13,232, up 1%. Gold was at 16,058, up 96%. Silver was at 32.27, up 116%. Yes, precious metals have knocked the socks off of paper assets. Also coming out this week, David Tice, a money manager, saying that gold will surge to $2,500 and the S&P will plunge to 1,000. He used to work with Federated Investors. He's very, very concerned about what's happening with central banks basically going out and printing money. $2,500 gold, the S&P to plunge to 1,000. Also, Bob Janjua, he actually believes the Dow and the gold ratio are going to head to 1. And he's not too sure if they're going to meet at 7,000 or 14,000. But he's very concerned once again about central banks printing money. And Harold, we have about 20 seconds left here. Thank you for your knowledge for another great show.
Thank you very much, Randy. It was a great show. I wish everybody a wonderful weekend and a very, very profitable day.
Don't forget, in Edmonton, for those that listen to us in Edmonton, we'll be on the air next week at 3:30. If you ever miss a radio show, the shows are archived at hesradio.com. You can also podcast with us now via that website. Telephone number to speak with Harold about diamonds, 1-800-432-1022, rarecoloreddiamonds.com, the website. Next auction for hsfineauctions.com is April the 9th. Rarecoloreddiamonds.com, telephone number 1-800-432-1022, and speak with Worldwide Precious Metals about investing and starting your own precious metals investment account. The telephone number 1-866-623-2002. WWPMC.com is their website. You can get our free weekly newsletter from Herald or Worldwide. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.